Well, good morning. It's Sunday, the 28th of January. In this episode, we're going to take a look at the outlook for 2024. Spent the last few weeks gathering up all of the intelligence from the financial community, reading reviews from companies like BlackRock, Lazard, and others to try and get their perspective on the outlook for the alternatives industry and the broader private capital markets. So this is our roundup. Let's dive in. Well, I guess the one thing that every report that I've read has in common is that AI is still going to be big in 2024. I do think that there's going to be a little bit of a clear out, only because it takes a bit of time for a business model to prove out. So I do think we'll see some casualties in that in the latter part of this year. But overall, the investment continues. There's a lot of talk about the vertical AI companies coming to the fore. Be interesting to see what happens there. Having dived into the use of AI in venture capital in particular over the last few weeks, there's definitely still some significant gaps there. There's some interesting stuff, so definitely some time-saving opportunities, but still a long way to go to make it accessible to, let's say, the non-technical user. And as a company that engages in providing technology to the VC sector and private equity sector in particular, despite investing in technology companies, there's a lot of non-technical folks in that sector. So I think to make those tools usable is going to be the key. But that's the first theme. The first major theme for 2024 is the continued explosion of AI and the continued flow of capital into the AI sector. The second major theme, which is looking more broadly, is the growth in ESG. This is something we've witnessed certainly over the last year. It's certainly been becoming more important for companies evaluating technology solutions in particular, but certainly looking at the investment portfolio, an increased emphasis on ESG. So I think the growth in ESG focus is going to drive a number of requirements of anyone in the private capital sector. The first is that you've got the process in place to evaluate your investments from an ESG perspective. The second is that you've got the technology to monitor them on an ongoing basis and to be able to report on performance of your investments from an ESG perspective back to your LPs. So that's something that we'll be focusing on in the coming year, but that's our second theme, is the growth and continued growth of ESG in private capital. The next major theme that we're seeing, looking more broadly at the private capital sector, is some of the highlights in the commercial real estate sector. So we are seeing certainly significant and continued growth in storage, in logistics, in healthcare facilities. There's a resurgence of retail, which I kind of talked about a number of vlogs ago. These are some of the highlights. Naturally, there's a significant and ever-present threat to the commercial real estate sector when we look at the office sector. So that's a theme that we're seeing on the negative side. So we'll watch with interest to see how that plays out. But a lot of debt coming due for refinancing. We're going to see a lot more, I guess, tenants whose leases are coming up for renewal and seeing what they do, whether they renew for smaller spaces and how that's evolving. It's obviously a major issue for anybody in the commercial real estate sector, but that's our next major theme that we see in these reports. Looking further afield in the private capital sector, so where is money flowing? Well, we're seeing a lot of money flowing into biotech, into health. So that's a major growth area. I think that's predicted to continue here in 2024. So biotech and healthcare still seeing that investment. I mentioned the investment in healthcare facilities, but more broadly, the health tech space is seeing a lot of incoming investment. And so we'll watch that one and see how that performs this year. And an ever-present theme that we're seeing, which continues here in 2024, certainly a lot of activity in 23 around this, is the increase in regulation. So lots of question marks being raised about the SEC's reach into the private capital sector over the last year or so, the increasing regulatory oversight that they're placing on it, the increased requirement for reporting and sharing of information with the LP base, the disclosure requirements that funds now have on preferential terms, things of that nature. That's going to continue in 2024. The significance of that for companies is that you must have a process for not just managing that, but also some auditability around it. We spend a lot of time working with our clients, ensuring that there's a full audit history of everything that they're doing. So if that is something that, well, it is something that you are subject to if you're in the private capital space, please do reach out. We'd be delighted to share with you what we're doing and how we can help. Another major theme that we're seeing is the requirement for due diligence. I guess this comes hand in glove with the fact that, yes, there are a lot of companies out there looking for fresh capital, companies who raised in, the early part of 2020 or 2021, looking for their next round. So lots of companies out there, lots of opportunities for those looking to invest. But there is, because of the market environment that we're in, increased need for due diligence. That significant change in how companies are valued. So a focus on a path to profitability is leading to increased due diligence requirements from those investing in the private capital sector. So that's something that venture capital companies in particular are being forced to reckon with. In one sense, there's increased deal flow, a lot more companies looking for it. But because of that need to look for the path to profitability, that due diligence has become ever more important. The next major theme is focusing on what's happening fiscally. Well, the debate is, I think, pretty much over in terms of the likelihood of interest rate cuts this year. But there is, across the dozen or so reports that I looked at, there is some contrarian opinion, some expecting it to be more of a melt up over the course of the next 6 to 9 months, perhaps seeing those rates come in at the back end of the year. But there is general consensus that there's 3 or 4 quarter percentage point cuts due here from the Fed in the US over the course of the next year, which can only be good for increasing activity rates and improving that cost of capital. So we'll watch that one. So there are the major themes that we're seeing here in 2024. And against that backdrop, here's what I think 24 is going to hold. So I guess the asset class outlook for 24, it's going to be a slow recovery is my guess. We're certainly seeing amongst the 650 plus funds that we have on our platform and the associated companies that run them, an uptick in activity. We're seeing more funds come to market, some of them opportunity focused, some of them focused on distressed assets. It does take a while for those assets to come to market, but we're seeing a slow uptick. I think the predictions would be that the latter half of this year will be significantly better. We're certainly talking to clients now that are planning for the second half of 24 with a lot of enthusiasm. So I think that it will get stronger as the year goes on. But we're going to see in the venture capital sector news of a clear out of those companies that those early stage companies that can't find the investment capital because their path to profitability is just too long. They don't have clarity around what that looks like. I think there will be some blowback as a result of the AI investment because not all of them are going to succeed. And because of the proliferation of companies in that space, I think equally there'll be a proliferation of companies whose business model is not proving out and either crash and burn or end up in some cases giving back cents on the dollar to their LPs via those funds. So I think there's going to be a little bit of a challenge to reckon with there. I think the fiscal outlook obviously is improving, so we can expect an uptake on the back of reducing interest rates. Inflation is well under control. The public markets are back. There's all-time highs here for the Dow in the last week. The S&P is up significantly. It's officially a bull market. And so I think the backdrop for positive momentum is very strong. So we'll see how it plays out. But that's our outlook for 2024. I hope whatever sector you're involved in, that it's a positive one. We're looking forward to a really strong growth year here in asset class. We have opportunities, I guess, to engage with you, whether the markets are strong and you're trying to manage that growth, or you're taking the opportunity to strengthen your own front, middle, and back office in preparation for the return of the markets. We'll be here for you. So Thanks again for watching, and wherever you are, hope you have a great week, and we'll chat to you soon. Take care.